CMG on a monthly chart. What a bellwether restaurateur this thing has been. This thing is 96.38% on a monthly parabolic 4-month move. Within the calendar month, we are going to look at trading the pullback in these names. And basically, I'm going to draw a trend line. I'm just going to keep this very quick because we have so many stocks to go through. So basically, here's the top end of this range. Here is the bottom of the monthly range, and you can see right here, it's very clearly that you had the bottom part, the gap 1 month, gap 2 months, 3 months up toward these highs. Now, granted, they did okay on their earnings, and granted, it's a great company, but I'm sorry, it's ran too far, too fast. We are going to look at the weekly chart behind it. The weekly chart. It's you can see that parabolic move straight up. Every bull rally on every great bull company and every great company has to have a pullback. And basically MMTs, we're trading it for the pullback, not because it's a bad company, because it's overbought. And it's 98.68% overbought. In the next video, I'm going to go through the call and the put strategy. And I get excited when they're this overbought, because that means that the pullback, the bull shakeout, bull rallies have bull shakeouts. They shake out the buyers, okay? So we're going to trade the pullback and then get net long once we go through that pullback phase in calendar March and April and May and June. And food inflation is rising at a 5% clip. So, you know, all the great stories and all the great news and all the things that the consumer can do as far as valuations go, CMG is at the top of that list. Now, let's get over to the call and the put side. Here we have an April 410 put that was up here at $36. It's down to $14. It's an April monthly, and it's a 410 put, and CMG was up 383 to 410.95, so we're going to be looking for that as far as the 410 April goes. Here is a 405. They're all relatively the same. In all of my years of making markets and derivatives, options and whatnot, is us market makers don't do things like you public people do. You can go get your option books and read all you want about it. Try to apply it. MMT, this was $26 handle. This is totally a deflated market when you look at the call and put structure. Here is a $400 put, which is $10 below the market. You all have the same thing. All have come down to deflated levels. And remember, bull, bear, whether it's a call or a put, because I can show you the same call structure. Here's a $400 call. The thing is up here. I'm sorry, that's inflated. They don't stay up there. So mathematical. You went from $9, which is a great move to have the calls. They made more than 100%, and they're inflated. If you want to take a look at, let's say, a $3.95 call, they're all going to show the same thing from their bottoms and how that they have gone up to such a weakly inflated area that you're going to actually, right on the other side of this, when you take a look at a $3.95 put for April, it's the very opposite. So this is the deflated, and I showed you the inflated, and it's how to trade it. The thing that we do like is this $410 put. It's a weekly that expires, and it's March 23rd. But take a look at the lows and the highs. Because it's all weekly, you know, they're going to take the most premium out. But the closing price of the weekly, and I'm going to show those here, right here. They were $6.60. They marked them down. This is the premium structure. You got a $3 range in that 410 put on a weekly. Now, if you take a look at the 405 weekly, it's got the same thing. But take a look here at the 405. They're $3.90. They got down. The range is only $2.13. But we're definitely looking at those two on the weekly. And, of course, we're going to go for this one here that has a $2 range in premium. This is just the way that they trade it on the daily level. But we're going to look to see how discounted that we get on the 410 put. $400 put. That's the ranges, $1.70 range on Friday. But when you take a look below the marketplace, they were up here, and I can take a look at all the peak premiums here in the video. And the thing about it is they're all deflated. That means that CMG has a pullback coming, and the put side is going to go up in value. Ha ha. Featuring CMG, call and put strategies. There is no calls to be bought. They're all up at the high. And therefore, we'll be looking at these various strike prices. We can even take a look at below the market, a 375 put. If they were $16 up here, they're down to $4.30. We'd look at buying these at $1.50. We get the right premiums. Premiums are different ways of trading. This is a monthly, and I like the 375 here. You don't have a lot of range in it on a daily level, but over a period of time, you can see here MMT how they pay. And once again, that's a 375 put. That last week it was up here at 1075. Hey, they get these things down a couple of more dollars. They're coming back up $2 or $3. Easy money MMT. Priceline and CMG we've done so far. And once again, the great bull rally and great bull rallies have pullbacks, as you all know. And the thing about this one, it's 98% overbought. It's time to get on the other side of CMG for a pullback.